More positive news, and the reason that the Rand rallied today, rating agency Fitch affirming South Africa's investment-grade credit rating. It was expected to, but the surprise was that Fitch maintained a stable outlook for South Africa rather than placing us on a negative outlook, which means that a downgrade could be more likely on the next review. The other two major global rating agencies also recently affirmed their ratings for this country. That means we have effectively avoided a downgrade for now into sub-investment grades, or so-called junk status.
A sigh of relief as Fitch keeps its credit rating for South Africa stable. However, analysts say now is the time for the work to begin.
We need to look at our labour legislation, we need to look at a lot of our red tape, we need to get our state-owned enterprises sorted, that the right management is there, we need a supportive government to many parts of business, and under those circumstances we can turn the economy around.
Economist Mike Schuessler says South Africa was very lucky that Fitch did not take the latest GDP into account. Data from Stats SA shows that the economy contracted by 1.2% in the first quarter.
We were very lucky to dodge that bullet from Fitch, because if Fitch came out a week or two later and they took this data into account, it would be a very different matter. The Bank Serve Africa Economic Transactions is showing us that, and other data, that the economy in the second quarter of this year is still under severe pressure, and we will be very lucky to dodge a recession.
Labour Federation Cosatu welcomes Fitch's decision, but says the goal should not be to keep rating agencies happy.
Rating agencies are not the panacea to our problems. To just keep them happy is not really going to help the South African situation. The fact that we have lost more than 350,000 jobs in the first quarter, what that means is that we need to do things differently. It cannot be business as usual. So from where we are as the Federation, we think now that most of the rating agencies have given us a space to breathe. Let us then go back, firstly have a job summit that we've been calling for, to stop this economy hemorrhaging the jobs that it has been hemorrhaging.
Government is being urged to implement reforms before the end of the year if the country is to avoid a recession. Fitch says the BBB- rating reflects low trend GDP, significant fiscal and external deficits, and high debt levels. This, it says, are balanced by strong policy institutions, deep local capital markets, and a favourable government debt structure. Diabo Seto, SABC News, Johannesburg.